Hi, I'm Drew Barrymore, and I want to tell you how you can help to support the life-saving work of St. Jude Children's Research Hospital. When you give, you're helping ensure families never receive a bill from St. Jude for treatment, travel, housing, or food, so they can focus on helping their child live. This holiday, help St. Jude give children the greatest gift, a chance at a lifetime.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.
Good afternoon. Getting right down to business here. We're doing it live right after Guy Benson at 3 and just before Randy Wang at 5 on the 790 KABC News Blitz. Mottek On Money live on the air, 790 KABC, streaming live online worldwide at KABC.com and the on-demand Mottek On Money podcast, KABC.com, Apple iTunes, YouTube, all your favorite podcast platforms. Stocks pulling back again today, led by some of the big tech names, including Oracle, coming under pressure today, closing down more than $10 at 178 and change. Investors also taking in the latest reports on the economy and what that means for Fed interest rate policy. The Dow came in for a closing loss of 228 points. S&P 500 down 79. The Nasdaq sliding 418 points. The Nasdaq down nearly 2% on the day as the tech-led sell-off accelerated into the close. AI concerns rattling the tech stocks again following a report in the Financial Times today that Oracle's $10 billion data center project has lost the backing of private lender Blue Owl Capital. This amid the scrutiny of increasing use of debt and off-balance sheet moves to fund tech companies' capital spending on AI infrastructure, despite persistent questions over demand for AI. According to Yahoo Finance, Oracle shares down about 6%. Mega-cap tech stocks followed, including NVIDIA, which closed down nearly $7 today at 170 and change. Broadcom also sliding. Google also moving lower in this latest tech sell-off. Micron Technology quarterly results after the bell. We'll take a closer look at that. Wall Street still taking in the November jobs report, which was delayed. Also, Fed Governor Chris Waller said today that the Fed still has scope to cut rates, hinting at 50 to 100 basis points of room. Netflix stock rising after Warner Brothers Discovery's board called on shareholders to reject the rival bid from Paramount Skydance. And Netflix stock, we see, did move slightly higher today at 94 and change of 22 cents. Warner Brothers Discovery shares down 69 cents at 28.21, and Paramount Skydance shares down 75 cents at 13.10. After hours, Micron did surge about 7% in after hours trading on its earnings news. The company beat Wall Street analysts' expectations and raised its second quarter revenue guidance. What else is happening? Well, silver and gold, they're calling it now the Burl Ives trade. We were on top of this one, folks, that's for sure. Gold hovering near its all-time high, right now just below 4,400 an ounce, and silver continues to shine at around 66 and change, 66.46 an ounce. Silver, 1 ounce of silver, a lot more expensive than a barrel of oil at this point, although oil did get a bounce today, right now at around 56.98 a barrel. Tesla coming off of its all-time high, pulling back about $23 at $467 and change. Ford, meanwhile, reversing course on EVs, and odometer fraud, as you heard at the top of the hour, becoming a serious and growing concern for used car buyers across the country, according to a new Carfax report. We'll get it into gear here, and we'll get the latest on the car news with our go-to car expert, Lauren Fix. Also, we're watching what's happening in Washington on health care. 4 House Republicans rebelling against House Speaker Mike Johnson today, backing a Democratic effort now to force a vote on extending the so-called Obamacare Affordable Care Act subsidies, exposing some Republican fractures over surging health care costs heading into next year's midterm elections. We'll get the latest on what's happening in Washington on that and more. We'll discuss the latest with Grover Norquist, the president of Americans for Tax Reform. But first, on your money, the markets, the economy, and the whole works now. Crypto, too, which has been under pressure lately. Joining us live now is Gabriel Wisdom, Managing Director at American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call here this afternoon.
Well, thank you, Frank. It was a great year. It's almost over, but we may have the next corrective year since 2022 because we're heading into a midterm election. And since 1950, midterm years have been the worst performing stock market years in the 4-year presidential cycle. It's because of uncertainty about which party is going to control Congress. And then we've got the AI bubble worries. The appetite clearly for risk and speculation is moderating. The home-related sectors have been very, very soft. Home improvement retail down 10.4% most recently. That signals that there's consumer stress in big-ticket purchases. Auto buying has been soft, and the average cost of a new car now above $50,000. And then market leadership extremely narrow. The big tech names, the Magnificent Seven, the Magnificent 20. That we saw what happened today with the exception of Micron Technology, and that was more of an outlier because that's a picks and axes play in this gold rush. But I expect 2026 is going to be a little choppier, a little more challenging.
All right, Burl Ives. That song is being played a lot more these days. Of course, we've been playing it for a while here and have noticed what's been going on in the world with silver hitting record highs, quite an impressive run-up in 2025. Heading into 26, we see silver right now above $66 an ounce, and platinum has come to life, getting close to $2,000. Gold, of course, hit a record high earlier this year and is near its all-time high once again, just below 4,400. What about these precious metals and the outlook heading into the new year?
How about these metals, Frank? We were early. And in fact, silver is up about 120% this year. I mean, that metal is outperforming the safe haven gold, which is up over 60% this year. The reason why silver is so strong and why people like me have liked it is there's very healthy demand prospects from artificial intelligence, the data centers, the solar cell manufacturing, electric vehicle manufacturing. Silver plays a significant role. And then we got news that the critical materials list, which is part of the Energy Act of 2020, where the Secretary of Energy determines which are the critical materials that we need. Silver is now included. So that's the story on silver. Gold, still under accumulation for good reason, and platinum, it's rarer than gold or silver, very popular for jewelry, producing catalytic converters that help reduce gas emissions. These are all very, very important metals.
Let me throw something out there. There was a time when platinum was more expensive than gold. With this meteoric run now in platinum, might that happen again?
I don't know that it will, because it doesn't have the appeal as a storehouse of value. It's more of an industrial metal, and of course, it's very popular with jewelry. The price of platinum is more volatile than silver or gold, and so fluctuating industrial demand, and then there's the geographically limited supply problems, primarily from South Africa. I think that contributes to platinum's unpredictability, but I still like it.
All right, people are talking today about gifting catalytic converters for the holidays because of the platinum content. Don't want to steal any, though. It would only have to be done legally if you're thinking about gifting catalytic converters for the platinum content. So that's the talk around town. What about oil here with the U.S. saber rattling in the Caribbean and locking horns, Washington and Caracas going eyeball to eyeball, and could see some action here. I guess we're going to get a speech from the president tomorrow, possibly focusing on this. Oil right now at 56 and change, coming down. And what's your outlook on oil here?
Well, we've got weak demand coming from China. They're struggling with their own recession, and also the supply has been increased by the non-OPEC producers. So you might say that oil has been sort of straddling a wall of bearish fundamentals, but long term, there's not a lot of investment. So the long cycle situation for oil suggests that you wouldn't want to sell it, and you're going to need it. We all use it, regardless of whether we're driving electric vehicles or not. Petrochemicals are, they're part and parcel of modern life. And then there's the risk of geopolitical disruptions. That means that the oil market could tighten very, very quickly. But in the meantime, for 2026, oil may just stay cheap enough to be more affordable for those of us who drive.
All right. You're also an economist, so if you can put your hat on for just a second here, based on what we got this week on the jobs numbers and unemployment ticking higher and the Fed taking all this in, and now a lot of speculation as to what the Fed's next move might be, and we're hearing from various Fed heads this week. What about what's happening on the economy and the outlook heading into the new year?
Well, the November jobs report, which came out on Tuesday, did show us that more jobs were created last month than expected, but the unemployment rate hit a 4-year high, which is an indicator of an economy that is slowing down. Tomorrow, Frank, we get the November Consumer Price Index report, and that's expected to show that prices rose about 3.1% over the prior year. That's well above the 2% inflation rate that the Federal Reserve has, that Fed target. But at the same time, everything is slowing down. Freight shipments, for example, fell sharply in the most recent report. There's something called the CAST report that flagged the potential for a 10% year-over-year decline in shipments if typical seasonal trends occur. And so we're seeing truckloads, shippers relative to past packaging. They continue to consolidate smaller loads into full truckloads. That's very bearish. So I would think, maybe all this talk about lower rates in 2026, it has some traction.
All right. I know you watch the cryptos, so let's talk about that for just a moment. A lot of volatility following Bitcoin's all-time high earlier this year, and it looks like there will probably be some more relaxation of some crypto regulation and other things down the pike here. That's what they're talking about in Washington, and obviously it's been an epic year for crypto until recently. We see Bitcoin got down to around 80. Now it's around 85 or so. It was above 126. What about the cryptos here as we go into the new year?
Well, there still is some institutional buying happening in the crypto space, but I think we're in the very early stages of adoption here. There's some 200 public companies around the world that hold Bitcoin, for example. The biggest one is a company called Strategy, symbol MSTR. They've deployed just under $2 billion to buy the cryptocurrency over the past couple of weeks, more than they spent in the prior 3 months. They've got 20,000 Bitcoin in their treasury. They've been issuing more stock in order to buy more Bitcoin. They're basically a Bitcoin bank rather than a technology company. But now the common stock for Strategy has sagged below the value, or it's about to sag below the value of their Bitcoin holdings. If that happens and Bitcoin remains at the current levels, well, it'd be like a closed-end mutual fund that trades below its net asset value. It might be attractive. In the meantime, Bitcoin and the other cryptos are in a bear market.
On there live with Gabriel Wisdom with American Money Management, author of Wisdom on Value Investing. Tesla coming off its all-time high right now at around 467 or so. Was up around 490 this week, and Elon Musk getting a lot of attention with the planned public offering of SpaceX, which has had more than 100 launches this year, including another one out of California today. Falcon 9 launched 27 Starlink satellites from Vandenberg Space Force Base in California this morning. Are you excited about the SpaceX offering and what they're talking about?
Well, it's pretty exciting, and it looks like Elon Musk is on his way to becoming the first trillionaire. The way things are going, his Tesla holdings now, for him, have increased dramatically. His net worth around $600 billion. Add to that the SpaceX valuation that they're talking about that takes them up to $900 billion. It's just incredible. And Tesla is no longer considered an automobile company. It's more of a robotics and AI play. So this is remarkable that Tesla ends the year where it is now at an all-time high.
Any specific places where you are putting money now and/or taking it off the table as we head into 26?
Well, there's been a warning light from the auto industry, Frank. As I mentioned, weaker demand. Customers did rush to buy earlier this year to sort of front-run the tariffs. If the auto stocks get cheaper, I'm going to be interested. And then there's other industries that benefit from lower interest rates, which I suspect going into the midterm elections, we will see. So I'm looking at the home builders, in particular, the State Street Home Builders Exchange Traded Fund, symbol XHB, has my interest right now.
On the air live with Gabriel Wisdom. Sadly, we do have some breaking news here, and that is that longtime San Diego County Treasurer tax collector Dan McAllister, who was a frequent guest on this program, was a big fan of yours, by the way, Gabriel Wisdom, who listened to this program regularly and indeed was on the program many, many times as the head of the San Diego County Treasurer Tax Collector's Office. Dan McAllister, we were just informed, has departed today at the age of 74, according to the announcement from his former office. He had stepped down from that position last August, cause of death not immediately available. Dan McAllister served as the county's taxation head for 23 years, from 2002 to 2025. He oversaw the collection of billions in property taxes in San Diego County each year, managed the $18 billion county investment pool, and administration of the county's more than $1.5 billion deferred compensation program. He also headed up many of the big organizations here in California, including CACTEC, the California Tax Collectors Association, and SACRS, another big organization that focuses on pension funds. And I know you had addressed both of those organizations. God bless his memory. Dan McAllister, I'm so sorry to report, has departed today at the age of 74.
That is very, very sad news. Dan was a passionate, tireless leader. I had the honor of serving on his advisory committees and as a voting member of the county's Treasury Oversight Committee, and he was a leader among treasurers and tax collectors statewide, as you noted, Frank, and he was a big fan of yours as well. He will be missed.
Most definitely. Well, we honor his memory, and God bless him, and I know he's listening right now, wherever you are, Dan. God bless you. Gabriel Wisdom, Managing Director of American Money Management, based here in Southern California, also author of Wisdom on Value Investing. We wish you a wonderful holiday season. Gabriel Wisdom, to you, your family, and your entire team there, thank you very much for all the great conversations this year. We look forward to picking it up again in the new year. Thank you very, very much for everything, Gabriel Wisdom.
Thank you, Frank, and Merry Christmas.
Merry Christmas to you. And
U.S. soccer. Reality says the odds are stacked against us. To think our U.S. men's national team can ever raise the world's biggest trophy. Be the first soccer team to beat them at football. Never. But here's the thing about us. Refusing to accept reality is kind of our thing. Being unrealistic, that's not a flaw. It's a force. It's fuel. Because if you want to be great and make history, never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
Check out the podcast that inspired Taylor Sheridan's latest series, Landman.
There's a stretch of road in an oil-rich region of West Texas. This region of West Texas, known as the Permian Basin, is in the midst of the biggest oil boom in history. This is a story of roughnecks, billionaire wildcatters, and wannabe dreamers. My name is Christian Wallace. From Texas Monthly and Imperative Entertainment, this is Boomtown.
Boomtown.
Follow and listen on your favorite platform.
Burl Ives calling it the silver and gold trade on Wall Street. Silver hitting record highs again today, above $66 an ounce, $66.46 here at last check. Got up to around $67, close to $68 an ounce. Gold, meanwhile, also kissing record highs recently and at or near all-time highs today at around $4,367.30 an ounce here at the moment. And platinum has a special shine today, getting close to 2,000. Right now at 1,931 and change, pulling back about $6 here at the moment, but getting close to 2K. The precious metals, of course, among the big winners this year, even exceeding the performance of a lot of the cryptos, especially lately, with the Bitcoin right now hovering at around 85,900 or so. Ethereum, ETH as it's known, at 2,800. And Solana at 123. Doge at the moment down to 12 cents. The Magnificent One, along with the other big tech names today, taking a hit. NVIDIA down nearly $7 at 170 and change. Oracle leading the tech names lower today by more than $10 at 178 and change. Broadcom bucking the trend up 5 and change to 326.02. Taking a look at Tesla, coming off its all-time high today, down about $23 to 467.26. The tug of war between Netflix and Paramount Skydance appears to have ended, with Netflix emerging as the winner here. That's what it looks like at the moment over Warner Brothers Discovery. Warner Brothers Discovery stock down 69 cents at 28.21. Netflix up 22 cents at 94.79. Paramount Skydance shares down 74 cents at 13.10. And the price of oil getting a bump today, up $1.04 at 56.98 a barrel. The yield in the 10-year note is at 4.16%. That's the one that impacts the fixed-rate mortgage rates out there, which have been elevated recently. And the volatility index on Wall Street so-called fear index, the VIX index, moving up 7%. Mottek On Money continues. 790 KBC's The Grinch showing up in Washington on this health care plan or lack of plan or whatever's going on there. 4 House Republicans rebelled against the House Speaker Mike Johnson and backed a Democratic effort to force a vote extending the Affordable Care Act subsidies, so-called Affordable Care Act, also known as Obamacare, exposing Republican fractures over surging health care costs. Let's bring in Grover Norquist, who has a front row seat to all this in Washington, president of Americans for Tax Reform, America's leading taxpayer advocate. Grover Norquist, thank you very much for taking the call this afternoon.
Yeah, we about 220 or so, roughly, Republican congressmen. In my high school graduating class, there were 220 people. There were always 4 people capable of any silliness or moral turpitude. When you have such a narrow majority in the House, as the Republicans do right now, any 4 people who are just irritated about the weather, angry with their spouse, feeling that they'd really like to get on Fox TV that day and be noticed as important, or they're really whining about some other bill that they didn't get support for, and so they want to take down something here. Or the people in their district said, you should really do something liberal to show how, broad-minded you are. Why don't you do this? And that's the danger, and that's what the Republicans have had to put up with for half a year now, a full year actually now, just about a full year, and often successfully getting everybody to play. But this is the first time that 4 members, instead of saying, well, I may vote no on a Republican good plan, have actually decided to throw in with the Democrats on a plan that says, let's continue Biden's bailout of Obamacare. Let's have no reforms. We now know that billions of dollars are being misspent, stolen, sent to Somalia, who knows what other places. We'd have no reforms, and we'll just keep spending for several years. We'll keep spending the money. This is, and by the way, what they've agreed to is to let the Democrats control the floor of Congress. And it's explained to me by the lawyers that the bill that they say they support, as bad as it is, could be amended by the Democrats. So it could be any sort of political game that they want to play. And 4 Republicans decided that while everybody else is trying to be out there saying, here is our message. Obamacare is the reason your health care costs are up. They said it would reduce your health care premiums by $2,400. Turns out it actually more than doubled people's health care and their health insurance costs. We need to remind people of that, because people who are mad that their health care is so expensive and difficult to access because of Obamacare, today, if they're not paying attention, they'll look up and say, "Oh, it must be Trump's fault. He's president. He's been president for like a year almost." But why? So obviously he's responsible for the failures of the previous 4 years. It takes a lot to get through some of the establishment media and get what's accurately out to the American people. And it is undermined by 4 characters who can't articulate why they're doing this. Why do they want to do this? They damage all the other candidates. They say they want to fight fraud, but given a chance to do so, they choose not to. They say they want to rein in spending, but given a chance, they're undermining that. So it's very frustrating. Although I do get myself a little bit disconcerted when I hear someone say Republicans did this when 4 idiots did something, right? You go, the Republicans didn't. 4 silly Republicans joined every single Democrat to do X. That's not the Republicans did this. That's 4 people who, for reasons of their own that I don't understand, did something that's destructive and foolish. So, yeah, go ahead. I'm ranting, but it's
the lawmakers involved 3 Republicans from Pennsylvania and 1 from New York State signed a petition led by the House Minority Leader Jeffries that would force a vote on a 3-year extension of enhanced Affordable Care Act subsidies. The lawmakers acted after the Republican leaders blocked votes on compromise measures aimed at extending and trimming the subsidies, saying the needs of their voters were urgent. Is that accurate? And where do things go from here?
The Republican speaker sat down with all the members and with various, there's some people who wanted to do much more spending restraint and different things. And they sat down and tried to work out something, as they have in the past, that would, sort of in a Venn diagram, take care of everybody's major concerns. There are a lot of things in the bill that the Republicans are putting forward that a lot of things that aren't in that bill that I think should be in that bill. But some of the liberals didn't want to do them, so we said, okay, well, to keep you happy, we'll do a smaller reform, not a bigger reform. And then they turn around and go, well, everybody else had to compromise, but we're not going to. And as if that makes them the toughest guys in the room. It just makes you wish, would go find another line of work. Politics is a team sport. You can't decide as one of the football players that you're going to run in the opposite direction and still be considered useful.
Yep. So this is pretty messy now. So what's going to come out? What is the Republican health care plan? Is that still being hammered out? Is something on the table? And what would replace ACA or Obamacare if, in fact, it ultimately does go away?
Yeah. Well, there are 2 things. One is you can't replace Obamacare or change the laws. You can change the numbers in it, the amount of the subsidy, but you can't change the law. For that, you need 60 votes because of the filibuster. So we have to work within the system of what can be done with a reconciliation package, which means changing budget numbers, but not changing the law. And you can do a fair amount with that. You can expand health savings account, which allows people to leave Obamacare and do something better. The Democrats had a lot of rules to make it difficult for people to escape Obamacare. Remember, they wanted $5,000 penalty if you didn't buy Obamacare. They wanted you to pay a fine of $5,000. That was stopped by the Republicans, by Ted Cruz's idea. He said, look, we can't abolish that fine because that's a change in law. But you know what we can do? Because we can affect budget numbers. Let's take the fine to 0. So there are millions of Americans wandering around not paying for Obamacare or paying a fine for not having Obamacare. What they do, it's illegal not to have Obamacare. You have to get it or else. But the or else is the fine is 0. So people actually were free to make their own decisions. And the Democrats wanted to force everybody into Obamacare as a way of forcing, young, completely healthy people to pay ridiculously high amounts to cover the costs of older people. And then that was their plan. So people would buy insurance they didn't need to cover other people's insurance. And that's not something that that was attractive to people because they couldn't afford to spend that much money at that point in their lives on insurance that they do not need. So we're in a position where the Republicans are doing two things. The number one problem is Obamacare. Do not increase spending on it. Do not increase subsidies. That only makes things worse. Two, there's a lot of fraud we'd like to change, but the Democrats oppose that, vote against it, won't allow us to pass it, and we need to highlight that the Democrats are defending. And in the Senate, the Democrats all voted to continue all the spending with no reforms, nothing to stop what we now know is rather persistent and rife fraud. Democrats said, we don't care about fraud. Now, that's something we can have a conversation about in the next election. The Democrats, let's spend almost $500 billion more with no effort to stop the fraud. The Republicans said we need to reform it so it stops the fraud, and we're not going to spend as much money. That is a winning message to the American people. The handful of the four guys in the House are confusing everybody as to what's happening because they go on TV and talk about something else. But remember, a bill only passes when it passes the House and the Senate. So they might be able to pass. First of all, some of the Republicans may have been sending a message to leadership. So they said, we vote to let the Democrats' bill to get on the floor, but we're not going to vote for it because it's crazy. That's possible. That would be, an improvement over voting for something that ridiculous. We'll see what they think their strategy is or what they're doing. I don't think it makes a lot of sense to me, so I'm not sure I could figure out why they think they're doing what they're doing. But let's say they do.
We're going to stop there, but thank you very much for that
Yeah.
thoughtful answer, as always, and that thorough assessment. Appreciate it and all the great conversations this year. We look forward to being in touch with you. In the meantime, I want to wish you a wonderful holiday season and a happy, healthy new year as we approach 26 here. Grover Norquist, president of Americans for Tax Reform, live with us here on Mottek On Money on 790 KABC.
U.S. soccer. Reality says the odds are stacked against us. To think our U.S. men's national team can ever raise the world's biggest trophy. Be the first soccer team to beat them at football. Never. But here's the thing about us. Refusing to accept reality is kind of our thing. Being unrealistic, that's not a flaw. It's a force. It's fuel. Because if you want to be great and make history, never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
Hey there. I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. A lot going on in the car business. Tesla stock taken off this week to record highs, pulling back a bit today, back to 467 and change, was up around 490 or so this week. Ford, meanwhile, has reversed course on EVs, slamming the brakes on their previously big EV plans, with the Ford CEO announcing the company's cutting production of the electric F-150 Lightning and refocusing its investment on hybrid vehicles and affordable EVs, whatever that is nowadays. And also, President Trump's auto pen reversal could save thousands on cars for consumers. Following all of this closely is our go-to car expert, Lauren Fix, the co-host of the Drive Car Show, a syndicated radio show, as well as founder of Car Coach Reports. Lauren, thank you very much for taking the call on all this big news here today.
Yeah, Ford just learned a very expensive lesson when it comes to electric vehicles. I think when they got into this, they were all in because the federal government put a lot of pressure on them. But now, after they were ready to build their all-electric battery plant in Kentucky, they realized this is not going to work. Customers aren't buying the vehicles across the entire country. It's not just California, but you think about the entire country, and sales aren't there, and the $7,500 tax credit is gone, and the mandates are gone, and that's mandates even going away in Europe. That just happened this week as well. So what ends up happening is car brands have to make decisions. Do you want to make money, or do you want to continue to take a loss on electric vehicles? So Ford made the decision to pull the plug on the Blue Oval City. I'm sorry, it's in Tennessee, not Kentucky. And it's a big correction course, although Jim Farley, who's the CEO, said it's a minor correction. But it's costing the company $19.5 billion. That's a lot of money. And they're going to have to make that up. And there is actually a mathematical way to make up that money. If they would lower the prices of all the cars they currently have on their lot by as little as 4%, they would sell more cars and they would be able to make up that difference. And it's a pretty simple mathematical situation. If you're taking a loss on every car you're selling, lower the prices, sell more cars to offset the fact that you're not selling as many cars as you thought. It's a difficult thing because you've got stockholders and boards of directors that put pressure on these car brands, but they're not going to make the F-150 Lightning truck anymore. So if you want one, there are deals to be had. They're going to do more hybrids, and if they do hybrids across the full lineup, like many other brands like Toyota is doing, that may be a good solution, and it gives customers options to have the electric component when you're sitting at the drive-through and to have the gasoline when you need to get someplace.
On their live with Lauren Fix, what is considered an affordable vehicle these days? Lauren Fix, since you're right on top of the prices and the sticker shock for a lot of people with affordability being such a big issue, what is considered affordable at the dealerships nowadays?
That seems to be the key political word these days, affordability. And we're hearing it everywhere. We'll probably hear it tonight when President Trump speaks as well. I expect him to say it multiple times. I wouldn't make it a drinking game. But I think that the problem is the average price of a car is over $50,000. And you're not going to believe this, but many people are paying almost $1,000 a month for their car. That used to be rents when I was younger. And so when you start looking at $1,000 a month is a lot of money for anybody. And so the key is to try and lower the price of cars. So when car brands started losing money, they started eliminating their entry-level vehicles, all the lower trims. So if you see like an L, an XL, an XLE, for example, they get rid of the L model, the entry-level models. And those are the ones that were under $20,000. So now we're hoping with the change of the rules, with President Trump undoing everything with the auto pen, like you were saying earlier, with taking out all these electric vehicle mandates, with the EPA rules changing, we're hoping that what brands will do, and they claim they're going to do it, they're going to start bringing in cars that are under $20,000 again. Now, that may mean smaller cars, but that also could mean cars that have less options. Yes, the brands make less money on those, but it really has to be about the consumer and making it affordable for you to say, I can afford this car. It's costing me a couple $100 a month. I can afford the insurance, and I can afford to add fuel to it. Now, the price of gasoline in some states, I know it's not California, in some states are below $2.50 a gallon already. And we're expecting that after the first of the year, the prices will drop in some states below $2 a gallon. That will carry across the country. Unfortunately, there's about $1.32 per gallon in excise taxes that the state of California is charging. And I think maybe a new governor is needed to lower those.
Mm-hmm. All right. And what about this auto pen stuff that could lower costs for vehicles? Tell us about that.
Yeah, President Trump really did a big favor for everyone by reducing, well, he's got a bunch of things. He's signed so many laws in place, but also saying anything that was signed by the auto pen is null and void. Now, I'm not sure on the legal aspect of that. I'm sure you've spoken with attorneys on that, but what it does from the automaker side is it means that car brands no longer have to produce cars with the corporate average fuel economy of 50 miles to the gallon. Now, what does that mean? Every car that they sell, they take an average. They say, we sold a truck, a car, a Mustang, whatever it is, and they average it out, and they say, okay, nobody was able to make the previous number of 34.5 miles to the gallon, but one company, Honda, because Honda doesn't sell trucks. They sell the Ridgeline, but they don't sell big trucks. And so they were able to meet that 34.5 miles per gallon on the cars that they sold. Every other brand couldn't, and there were tons of EPA fines. Those fines are out the door. That's good for car brands. They can then take that money and invest it back into cars, which means they can invest it back into people and more employees. And all of that is good for us. So we're expecting cars to lower by about $1,000 a car to start, but offering more entry-level cars will lower that average price back to where it was, which used to be, before COVID, $35,000 a car. Now, if we can bring the prices back to that, people will start coming back to dealerships to buy new cars. Right now, the used car market is still very strong.
All right, and what do you think of this odometer fraud issue? Carfax are reporting it's a serious growing concern nowadays.
There's a couple different things, and actually I have a report coming out very soon. When President Trump signed that Freedom for Cars Act, one of the reporters asked about mileage blockers, and I had not heard of that myself either. It's something that's available in the UK. It is illegal, so please don't do this. But it's a component that goes into your onboard diagnostics. You plug it in under your dash, and it changes the actual mileage of your vehicle. So that is fraud.
Wow.
So anybody who's doing that is a serious problem. You can go to prison for this. It's a plug-and-play thing, and it needs to be outlawed.
Yeah. Lauren, thank you very much for bringing that to our attention. Lauren Fix, co-host of the Drive Car Show, syndicated radio show, as well as founder of Car Coach Reports. We wish you a Merry Christmas, Lauren, and thank you very much for taking the call live with us here. I'll be back again with more at 4 tomorrow afternoon.
Family Matters amplifies the loudest and the proudest political voices in the Black community today.
What's up, guys? I'm CJ Pearson. There's so many incredible perspectives here in the Black community that you're going to hear from each and every week. This is exactly what the mainstream media was missing.
Because faith matters, country matters, and family matters.
And actually talk to the people at the forefront of this change in the community. And by the way, it's no small number. It's growing every single day. That's why this moment matters.
Family Matters with CJ Pearson. Follow and listen on your favorite platform.